pretty damn close to the peak right now. So basically talks about kind of the predicament that the US is in right now, how the US is actually in a lot of debt, which has a lot of implications, right? We could either go down a path of inflation and inflate our way out of the debt, or we can go into austerity and stop spending, which is kind of a lot of what Trump has been doing by like firing people in the government and all that. It's reducing spend. It might freak you out a little bit, but it's actually a really, really good read because you start to realize how similar 1929 is to our current predicament, right? There's actually a lot of parallels. It's actually kind of scary. Because in 1929, what happened in the 1920s was a lot of retail investors got into the stock market and they started investing on margin, right? Which means basically borrowing money to invest in the stock market. We got a lot of really high valuations in certain stocks. We had a lot of leverage in the market, so a lot of debt. So if you think about it, there's a lot of parallels to today. You know, the Robin Hoods of the world really got a lot of retail traders in. A lot of people have been investing on margin or with other types of leverage, which definitely puts a lot of risk into the system. We are actually at a very high valuation right now for the stock market. If you take a look at S&P 500 PE ratio, for those of you that don't know what a PE ratio is, it's the price to earnings ratio. It's basically how expensive is the stock market. And if you look at it, we are at historically high levels right now. We're pretty damn close to the peak right now. So if you're thinking about, is the stock market expensive? That is a huge indicator. We're at a very expensive stock market right now. However, when I see valuations like this, it makes me think maybe this is not the time that I want to be leveraged in the market. Maybe this is not the time that I want to be super pushing for these high valuation stocks. And it makes me want to be a little bit more conservative, right? So if you guys haven't read these books, Ray Dalio, How Countries Go Broke, and Andrew Ross Sorkin, 1929, these are two very good books, I think very relevant to what is happening right now as well. Another really big red flag that I'm seeing as well is the fact that we're seeing very high government debt, right? So if we type in government debt to GDP ratio, right, you can see here that the debt has gotten really out of control. It'd be great if we could actually go back further in this. But I mean, our government debt is about as high as it's ever been in all of history at 118, right? So that means 118% of GDP is our debt, right? Today we're at 118%, 120%. If this keeps going up, it gets more and more expensive to maintain. And eventually you either are forced to reduce it or there's a crack in the system and maybe the US dollar goes bye-bye. So hopefully we're not heading in that direction, but it's not looking so hot. And it's making me think, hey, maybe we want to be investing in some stuff that is not going to explode if things go sideways, right? So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.